Welcome back, ladies and gentlemen, for what is going to be nothing short of another jam-packed daily cryptocurrency and market update with yours truly, All In Crypto. I'm wishing you all a fantastic Friday, and we have a very interesting update lined up for you today. Yesterday, we spent quite a lot of time, and pretty much the whole video, looking at things internal to the cryptocurrency space. And we are going to be doing some of that in this video. We're going to be looking at a number of crypto indexes that are all pointing to further continuation to the upside. But what we're going to be doing is we're actually going to be looking at the further destruction of the monetary systems in the United States and really more broadly, and showing you the crossover and why actually this is bullish for assets. Generally, when I say that the Japanese Nikkei is a short yen trade, there's a lot of alpha in that, because essentially what people are doing is they're getting out of their currencies and putting it somewhere where it actually isn't depreciating to the same tune. That is really what I mean by the Nikkei is a short currency trade. The S&P is a short dollar trade. Gold is a short dollar trade. Bitcoin is a short dollar trade. And actually crypto more broadly is a short dollar trade. And we're about to see absolute proliferation of the dollar system. We have $9.3 trillion worth of debt to be refinanced in the next 12 months. And what does all that mean? Well, we're going to be breaking it down in this video. I promise you, we are not going to be spending all video talking about how Trump was allegedly found guilty of 34 cases of something or other. Although I had a lot of questions, and maybe we'll start there in regards to what this means for the cryptocurrency space. Trump has came out and been very kind of accommodating to the cryptocurrency industry. He said he wants to make the US the home of it. Well, actually, we've not just seen Trump do that. We've seen pretty much all political candidates. It's a massive voting issue. They estimate there's around 50 million users of crypto within the United States. And of course, each and every presidential candidate wants to go after those. So I think regardless of what happens with Trump, any kind of candidate is also going to go after the crypto voters, and they're very much going to be appealing to them. So I wouldn't worry too much about that. We don't really want to dive into all that in this video. This isn't a political channel, it's a crypto channel. But where there are crossovers with politics and crypto, we go down those rabbit holes. So without further ado, ladies and gents, let's dive into it all. And let's start things off by looking at the destruction and the further destruction of the debt-based systems, the dollar-based systems. Now, this is from Bitcoin News. A record 9.3 trillion in government bonds will mature and need refinancing within the next 12 months. What the hell does all of this mean? Well, we can see the chart here. And the chart is titled "A Record 9.3 Trillion." We've just read that. Distribution of interest-based US debt amounts maturing. Now, we've spoken previously about how Stan Druckenmiller went from a Mag 7 NVIDIA stock and reallocated to a basket of very small stocks, the Russell 2000. And we've said that is essentially his vote of confidence in regards to perhaps interest rates coming down, because the Russell is a lot more of an interest rate sensitive market. But generally a bullish environment that is going to see smaller caps outperform larger caps. That's how it goes. In times of uncertainty, larger caps outperform, or they're more of a certain play than smaller caps. In times of certainty, in a more bullish environment, the smaller caps do well. And we've used NVIDIA as a barometer for Bitcoin, and the Russell 2000 as a barometer for altcoins. We're still yet to see alt season, ladies and gentlemen. Do check out the Patreon and become a patron, and catch up on Sunday's meeting, where we give you a list of reasons in regards to why it is we think that Bitcoin dominance may be coming to an end. When something talks and quacks like a duck, we love to say that on this channel, it's a duck. But let's get back to the topic at hand, and that is looking at the further destruction of the debt-based systems. So the Fed, arguably, and the US government, probably more importantly, arguably needs interest rates to come down more so than anybody, because this refinancing is going to take place at a time when interest rates are the highest they've been for, 20, 30 years. And that is going to see more money needed to be printed to ultimately cover the debt, to pay the debt. Now, we already know, and we're going to dive over to the Fed's official stats from Fed Economic Data, that interest rate payments are far exceeding $1 trillion, something like $1.1 trillion a year, just on interest rate payments, not spending also. And actually, we've seen Janet Yellen largely null and void Jerome Powell's sort of quest at QT. This is how they kind of work. They take with one hand, but they give with another. And ultimately, with this refinancing that's going on, we are going to see skyrocketing in regards to debt payments. Now, that means further money printing, further issuing of debt. What is debt? Debt is the other side of the equation of money itself. So when you increase the amount of debt out there, you're increasing the amount of money. Let's dive over to a chart of the US money supply and assets. The picture is a very clear one that's being painted, ladies and gentlemen. Ultimately, assets, and this is why the rich get rich. If you look at a chart, and this is why we're so passionate on this channel about educating people financially. If you look at a chart of the top 1% of individuals from a net worth point of view, it just goes up and with the money supply. It literally mirrors the money supply perfectly because they own assets and they hedge that money supply. Remember what I said? The Nikkei is a short yen trade. Assets are a short dollar trade, and everybody needs to own them. This is why you could have just parked your money in the S&P 40 years ago and you'd now be a multimillionaire. We can still arbitrage that, and we're arguably at a point with the fiat systems, like we just showed you with the sort of refinancing that's going on, where they're spiraling out of control, and that equation is becoming fierce, to say the least. And crypto, by the way, ladies and gentlemen, is the fastest horse in that race. We showed you yesterday, we sort of rebutted Peter Brand's tweet in regards to how Bitcoin isn't in an uptrend against gold because it hasn't broken. Not to call him a ding dong. We've been going up against gold for nearly 2 years now, and that's going to continue. We're about to break all-time highs. There's technical structure there that sees us go even further. It's not just Bitcoin going up against gold. It's Bitcoin against the SPY. It's Bitcoin against everything in an environment when things are going to be going up on their own. It's not that the SPY's going down or gold's going down. It's that Bitcoin's going to do even more. And altcoins, and their day will come, ladies and gentlemen, are going to go even further. We're going to be talking about altcoins in a number of indexes that all point bullishly, that are offered out there by various institutions that also offer a Bitcoin spot ETF. But we'll also be looking at the total 2 and a number of other things, of course, Bitcoin itself. But this is what's basically taking place. Very interestingly, this is the status of banks' unrealized losses in Q1. So the first quarter of this year. Just look at this chart. This is how badly banks are underwater that hold basically securities. It's not stocks, by the way, because they've been doing well. It's treasuries. It's debt. And the question is, who's going to be buying all this debt when they're going to be printing a hell of a lot of it? It's not going to be the public sector. It's going to be the banks. Because we see, and when I say bank, I mean the Federal Reserve, they might do it directly in regards to adding to their balance sheet. They might do it indirectly. We can show you a chart of assets aligned with the Fed balance sheet. In fact, let's do that. Let's not just talk about it. Let's pull up the Fed balance sheet. And look at this with assets. You can see the kind of symmetry that we're showing you guys here. So the Fed's going to have to step in and buy the debt. We'll come over to the debt charts in just a second. We see also a massive moving away from most notably China, India, Russia, and Turkey from US debt. And this has actually now been admitted. This is from Bilaji, great guy to follow, by the way. Very spot on about many things out there. I don't think he's spot on about everything, but who is? We're all human. The Fed now admits some countries are moving to gold, but says it's a small group. Of course, they would say that, wouldn't they? We're also seeing BlackRock double down on Bitcoin. Pretty much every major bank that can buy Bitcoin buying it. Why is that? You happen to have found yourself. I happen to have found myself, and I'm very fortunate to be in this position where I can talk to you guys every day, at this amazing convergence of a failing value system at the time perfectly where a new one has arisen. And an entire technological shift in regards to the world is also taking place. The opportunities that are going to come out of that are there to be grabbed by the horns, so to speak. And we're hopefully going to help you do that here on this channel. So it's very interesting, all of this news that's going on. We have also looked at TLT, which is a BlackRock offered ETF for 20-year plus treasuries. So I'm saying this chart actually, in my opinion, is going to go up. We think yields are going to go down. Again, bringing in Stan Druckenmiller here and why he moved from a large cap to a small cap. He's not going to do that in an environment where interest rates are going up and liquidity isn't forthcoming. He's basically betting on the further proliferation of debt, the fiat system, and we're showing you what the probable causes of all that is. This is TLT. We're bullish on this chart, which means that interest rates are going to go down, and it means that someone's going to be stepping in and buying debt at a time when a shed load of debt is being issued and interest rates are going down. Who is that going to be? That's going to be the Federal Reserve, which means they're going to be printing more money to essentially sustain the money that they've already printed. What is an asset going to do in that? Remember this saying because it's so important. The Nikkei is a short yen trade. The S&P is a short dollar trade. The FTSE, which is at new all-time highs above and beyond, is a short pound trade. The DAX is a short euro trade. Bitcoin is the king short fiat trade. And crypto assets also appreciate from that, but they're fundamentally changing the world. I am at the forefront here at the channel of this. I speak to so many projects out there, from AI to finance, to things like identity, to supply chains, to everything. What an opportunity we have in front of us. You've got this perfect marriage of everything. We're talking about fundamental things that affect monetary sort of macro policy and assets more macroeconomically. But we can also break that down and look at things technically, which is what we're going to do now. Also, just a very quick and interesting thing to show you guys is Caitlin Long. I'm a massive fan of Caitlin Long. I think she's got a great second name. The Supreme Court unanimously has now supported the dual banking system in the United States. Dual banking system. Bitcoin perfectly came around when the crack started to show in the other one. And why might that be coming to the forefront now? Well, because people don't want the old system that is now, we're at a point where it's spiraling out of control and that value itself is being threatened in the way that we all have grown up and known it. I only know the British pound. Of course, when I go abroad, maybe I'll get some euros, although I don't get many euros now for my British pound. So on and so forth. But it's very interesting, all these things that are taking place. This is a great fundamental narrative that's going to see crypto do well. Just very quickly, a little bit of macro news. We do have core PCEs coming out today. It's a preferred Fed inflationary metric. It's basically stagnant. We're not in the 1970s style resurgence for inflation, which would, of course, then affect monetary policy. Assets would do well in that environment because it's inflationary. And a real good question that I do get asked is, well, why wouldn't inflation resurge with all the debt proliferation? I think it is to a degree, but maybe not in the same way people are looking at the 1970s. I think we have a very different kind of scenario going on right now. Let's talk sort of internally about crypto, and I want to start with our favorite chart, which is the total 2. We are just waiting for this to complete, and we are expecting the total market cap, excluding Bitcoin, to get to $3.8 trillion. That's over a 3x. We've looked at fundamentally what's happening with the devaluation of the dollar that's going to see this take place. Remember, we have that entire thesis on the dollar in regards to coming to the lower band of that channel that we've been forming since 2008 when we had the financial crisis. Just to put into perspective again and go back to that $9.3 trillion, okay? Let's round it up to 10 for the sake of my brain. 5%, 5.5% on that is over $500 billion. The 2008 financial crisis, I think the bailouts for that were to the tune of $500, $600 billion. That's just in interest rate payments on that debt, let alone everything else. This is where we're at. We're at a kind of, every year we're spending more money than what we did in the 2008 financial crisis, to the orders of magnitude more so. Spiraling. So total 2, to get back to the sort of topic at hand, we're expecting well over a 3x for this. Again, this is stuff that people don't look at, but we look at a lot of the sort of crypto indexes out there. So these are exchange-traded products that are also facilitated by the same people that facilitate the Bitcoin spot ETFs that are now looking to facilitate the Bitcoin Ethereum ETFs, the Ethereum spot ETFs that we are well and truly on the track to. All of those are getting updated. I think we're seeing futures ETFs actually starting to trade on the 4th of next month, very interestingly. But these are crypto indexes, so baskets of like the top 10 or a basket of cryptocurrencies. It typically goes Bitcoin, Ethereum, Solana, XRP, Cardano, Polkadot, these kind of things, sort of large caps. This is 21 shares crypto basket index. This has got a 4x ahead of it, in my opinion, and that's technically all signaled. Our first technical target has been made. We're now going above and beyond. One swallow does not a summer make. Let's take a look at Bitwise's top 10 crypto index fund also. What are we seeing? The same damn thing. When you have this marriage of technicals and fundamentals, when something walks, talks, and quacks like a duck, it's a duck, and hopefully you're going to be having golden duck for dinner. So this is the top 10 Bitwise crypto index fund. You can see this is pointing out a similar thing. This has got over a 10x ahead of it, or just under a 10x, I should say, ahead of it. When we looked at this the other day, it hadn't quite formed this last weekly candle. Also, we have Grayscale's digital large cap fund, also very similar and kind of predicting somewhere around a 10x ahead of it, and very much making smaller targets that we had, moving on to broader ones. There's so much that we can diverge into in regards to the kind of macro picture that we have. It's just a case, we've taken a pause due to sort of uncertainty around interest rates. People are pricing out potentially more than they should have. Markets have readjusted, risks readjusted. I do believe we are now going to be heading back onto the course of certainty. Why Stan Druckenmiller has moved from a Mag 7 down to a smaller cap stock. Let's just pull up the Russell 2000. We've been talking about Stan. We've been talking about the Russell. Let's pull the bloody thing up. And this is E-mini. No, it's the IWM is exactly what he bought. Remember, we were looking at this as a range. Bullish on this. Divergence is present, just like we see with the total. This is going to do well. It's not just that. It's debt. It's housing. It's everything. It's assets generally. Ultimately, you want to be in the fastest horse, or you want to be on, I should say, using that analogy, the fastest horse in the race. And we believe that's crypto, and we've shown you crypto against the SPY, gold, etc., etc. So that is it from me, ladies and gentlemen. Let me know what you think about the current situation we're in, how that's going to affect assets. If you've enjoyed the content, a like is always appreciated, so is a comment, and I'll see you all in the next one. Thanks a lot for watching. See you in the next one.